Hi friends, today, let's look at why investing in gold is a good thing. Okay, let's learn more about gold prices and what makes this precious metal coveted by so many people around the world today. The mystery and wonder of gold prices. Gold prices are constantly changing, which keeps investors checking the price of this precious metal every morning. Despite this level of speculation, gold continues to be the most popular investment precious metal. For centuries, gold has been a mysterious symbol of value and wealth. Throughout the history, people have continued to hold gold for various reasons. Societies, and now economies, have placed value on gold, thus perpetuating its worth. It is the metal we fall back on when other forms of currency don't work, which means it always has some value as insurance against tough times. Below are 10 practical reasons to think about owning some gold today. What is the meaning of gold today? Throughout history, gold has been seen as a special and valuable commodity. Gold keeps the same meaning today also. Today, owning gold can act as a hedge against inflation and deflation alike, as well as a good portfolio diversifier. As a global store of value, gold can also provide financial cover during geopolitical and macroeconomic uncertainty. Let's look at the 10 fair reasons to own gold now. 1. Basic instinct. The motive to be the owner of gold. Investing in gold increases the saving motive in humans. For centuries, after obtaining gold, people did not change the gold, they preferred to hide it. Historical experience has shown that the owner of gold wants more gold. Investing in gold as a result of this basic human motivation about gold increases the saving motive in humans. Of course, spending gold is not as easy as spending money. Because gold is a less liquid asset than money. 2. Why is the gold valuable always? Unlike paper currency, coins or other assets, gold has maintained its value throughout the ages. People see gold as a way to pass on and preserve their wealth from one generation to the next. Since ancient times, people have valued the unique properties of the precious metal. Gold doesn't corrode and can be melted over a common flame, making it easy to work with and stamp as a coin. Moreover, gold has a unique and beautiful color, unlike other elements. The atoms in gold are heavier and the electrons move faster, creating absorption of some light, a process which took Einstein's theory of relativity to figure out. 3. It is just a paper indeed. Keep this in mind. Although the US dollar is one of the world's most important reserve currencies, when the value of the dollar falls against other currencies as it did between 1998 and 2008, this often prompts people to flock to the security of gold, which raises gold prices. The price of gold nearly tripled between 1998 and 2008, reaching the $1,000 an ounce milestone in early 2008 and nearly doubling between 2008 and 2012, hitting around the $1,800 to $1,900 mark. The decline in the US dollar occurred for a number of reasons, including the country's large budget and trade deficits and a large increase in the money supply. 4. Gold as an inflation hedge. Gold has historically been an excellent hedge against inflation, because its price tends to rise when the cost of living increases. Over the past 50 years, investors have seen gold prices soar and the stock market plunge during high inflation years. This is because when fiat currency loses its purchasing power to inflation, gold tends to be priced in those currency units and thus tends to arise along with everything else. Moreover, gold is seen as a good store of value, so people may be encouraged to buy gold when they believe that their local currency is losing value. 5. Gold keeps you. Deflation is defined as a period in which prices decrease, when business activity slows and the economy is burdened by excessive debt, which has not been seen globally since the Great Depression of the 1930s, although a small degree of deflation occurred following the 2008 financial crisis in some parts of the world. During the Depression, the relative purchasing power of gold soared while other prices dropped sharply. This is because people chose to hoard cash, and the safest place to hold cash was in gold and gold coin at the time. 6. Gold is a reliable politician. Gold retains its value not only in times of financial uncertainty, but in times of geopolitical uncertainty. It is often called the crisis commodity, because people flee to its relative safety when world tensions rise. During such times, it often outperforms other investments. For example, gold prices experienced some major price movements this year in response to the crisis occurring in the European Union. Its price often rises the most when confidence in governments is low. 7. Gold's supply decreases, price increases. Much of the supply of gold in the market since the 1990s has come from sales of gold bullion from the vaults of global central banks. This selling by global central banks slowed greatly in 2008. At the same time, production of new gold from mines had been declining since 2000. Annual gold mining output falls from year by year. It can take from 5 to 10 years to bring a new mine into production. As a general rule, reduction in the supply of gold increases gold prices. 8. Gold's demand increases, its prices increases. In previous years, increased wealth of emerging market economies boosted demand for gold. In many of these countries, gold is intertwined into the culture. India is one of the largest gold-consuming nations in the world. It has many uses there, including jewelry. As such, the Indian wedding season in October is traditionally the time of the year that sees the highest global demand for gold. In China, where gold bars are a traditional form of saving, the demand for gold has been steadfast. Demand for gold has also grown among investors. Many are beginning to see commodities, particularly gold, as an investment class into which funds should be allocated. In fact, SPDR Gold Trust became one of the largest ETFs in the US, as well as one of the world's largest holders of gold bullion in 2008, only 4 years after its inception. 9. Put the eggs in different baskets. The key to diversification is finding investments that are not closely correlated to one another. Gold has historically had a negative correlation to stocks and other financial instruments. Let's look at recent history. The 1970s was great for gold, but terrible for stocks. The 1980s and 1990s were wonderful for stocks, but horrible for gold. 2008 saw stocks drop substantially as consumers migrated to gold. Properly diversified investors combine gold with stocks and bonds in a portfolio to reduce the overall volatility and risk. 10. Gold as a long-term friend. Gold should be an important part of a diversified investment portfolio because its price increases in response to events that cause the value of paper investments, such as stocks and bonds, to decline. Although the price of gold can be volatile in the short term, it has always maintained its value over the long term. Through the years, it has served as a hedge against inflation and the erosion of major currencies, and thus is an investment well worth considering. Well, I have one more question. How can I invest in gold? How can I turn my gold accumulation into a profitable investment? The most preferred investment channel to turn gold accumulation into investment is gold accounts. You can buy and sell securely with gold account, and you will not have any problems with transportation or storage. You also get the opportunity to protect against risks such as loss of settings and wear. However, the point to be considered here is the value of the exchange rates of the bank you work with. Not every bank buys and sells your gold at the same rate. For this reason, you can get an advantage by making a comparison before making an investment and choosing the bank that offers more favorable exchange rates. Another important issue in gold investment is timing. The time zone in which gold is traded in the markets usually coincides with the time when you are the busiest due to business life and daily rush. For this reason, your investment often remains after working hours and you lose the advantage of exchange. However, if the bank you work with protects the trading rates as it is during working hours and regardless of day and night, and it applies appropriate margins, this gives you a great advantage. If your investment hours are constantly changing according to your daily intensity as we have stated above, then your bank's internet and mobile branch will be your biggest assistant. Because, through these channels, you can make transactions even in your own seat without waiting for the day and night, without going to the branch and waiting for the markets to open, and you can take control of your investment independently of time. Yes guys, we came to the last part of our lecture video. Anyone who wants to buy and sell gold profitably. Anyone who wants to invest in gold should know the factors affecting gold prices. Let's check it out. Factors affecting the gold price. It is an investment tool used in gold production and investment purposes, but also traded in international markets. The factors that affect the price of gold are the factors that affect the supply and demand of gold. These are 1. Industrial demand, especially for jewelry demand. 2. Gold extraction costs of mining companies. 3. Geopolitical conditions of countries with high weights in gold supply and demand. 4. Prices of oil and other commodities. 5. Gold buying and selling transactions of central banks. 6. Monetary policies of central banks. 7. Real interest rates. 8. Inflation rates. 9. Growth rates of world economies. 10 hedging operations of gold producers. 11 the amount of short and long positions in futures markets where gold is traded. 12 speculative transactions. 13 the value of the US dollar against other currencies. Thanks friends. I wish you a good day. As Charles Dickens said, as good as gold. Days.